Hello, everyone, and welcome back to Boni's Life. What a week it has been. The entire financial world has been on the edge of its seat, waiting for the latest pronouncement from the high priests of finance at the Federal Reserve. And they did not disappoint. We finally got the rate cut that the market has been clamoring for. But as with all things in the world of crypto, the answer to one question only leads to a dozen more. Is this the starting gun for the next great bull run? Or is it a siren song luring us onto the rocks of another brutal correction? The stakes are high and the uncertainty is palpable. But fear not, because that's what we're here for. In today's episode, we're going to dissect the FOMC's decision, peel back the layers of market sentiment, and dive deep into the charts to give you a comprehensive guide to navigating the treacherous waters of the crypto market in a post-FOMC world. We'll be covering everything from short-term scalping strategies to long-term investment philosophies. So, whether you're a seasoned pro or a fresh-faced newbie, there's something in this episode for you. Let's get started. Now, let's get down to the brass tacks. The FOMC's decision to cut the federal funds rate by 0.25 percentage point was, to put it mildly, the worst-kept secret in Washington. The market had not only priced it in, it had already sent out the invitations, booked the DJ, and ordered the champagne. The 2-year Treasury yield, which is a key indicator of where the market thinks interest rates are headed, was already trading a full percentage point below the Fed's target rate. So when Jerome Powell stepped up to the podium, it wasn't a question of if they would cut, but by how much, and what they would say about the future. The 25 basis point cut was the baseline expectation, and the Fed delivered. We saw an immediate, albeit modest, rally in risk assets across the board. Bitcoin, in its typical dramatic fashion, surged past the $113,000 level, and Ethereum, not to be outdone, reclaimed its rightful place above $4,100. But here's the million-dollar question. Was this the starting pistol for a new bull market, or just a temporary sugar high before the inevitable crash? To answer that, we need to dig a little deeper into the Fed's statement and Powell's subsequent press conference. And that brings us to the all-important question of market sentiment. You see, the crypto market is driven by two powerful emotions, fear and greed. And just a week ago, fear was the undisputed king. The Crypto Fear and Greed Index, our trusty barometer of market sentiment, had plummeted to a chilling 28, deep in the territory of extreme fear. It was a bloodbath. People were dumping their holdings, convinced that we were heading for another crypto winter. But then, something shifted. The moment the Fed announced the rate cut, the fear began to dissipate. And now, the index is sitting at a perfectly neutral 50. It's as if the market has taken a collective deep breath and is now calmly assessing the situation. This tells us a few things. First, the panic sellers are gone. They've been shaken out of the market, leaving a more resilient base of holders. Second, the market is no longer pricing in a worst-case scenario. The rate cut has provided a much-needed dose of optimism. But, and this is a big but, we're not out of the woods yet. A neutral reading of 50 means that the market is in a state of equilibrium. It's a tug-of-war between the bulls and the bears, and the winner of that tug-of-war will determine the direction of the next major move. Now, let's get our hands dirty and dive into the charts. As always, we'll start with the undisputed king of crypto, Bitcoin. The next 48 hours are going to be a real nail-biter. We have the monthly and quarterly closes happening simultaneously, a rare event that has historically been a harbinger of major market shifts. For our short-term traders, the levels to watch are crystal clear. We have a formidable wall of resistance at $115,000, with smaller hurdles at $114,750 and $115,500. A decisive break and close above this zone would be a massive victory for the bulls, potentially igniting a rally towards the $120,000 psychological level. On the flip side, we have a crucial support zone at $110,000, with a secondary line of defense at $109,000. If the bears manage to push the price below this level, we could see a swift and brutal drop to the $105,000 mark. So, for those of you who are playing the short-term game, the message is clear. Be agile, be disciplined, and for the love of Satoshi, use a stop loss. Now, for our midterm swing traders, the outlook is a bit more optimistic. We are entering October, a month that has a legendary reputation in the crypto world for delivering face-melting rallies. On average, Bitcoin has seen gains of over 20% in October. And if we manage to close September in the green, it would be a powerful confirmation of this bullish seasonal trend. In this scenario, I would be looking for a move towards the $118,500 to $120,000 range, with a potential stretch target of $123,000. However, we can't ignore the dark clouds gathering on the horizon. The looming threat of a US government shutdown is a major wildcard. A shutdown could spook the markets and trigger a flight to safety, which could put a damper on our October party. So, for our swing traders, the strategy is to be cautiously optimistic. Look for buying opportunities on any dips towards the $106,000 support level. A stop loss below $105,000 is non-negotiable. This will protect you from a catastrophic drop while still giving you exposure to the potential upside. And now, for my favorite group of people, the long-term hodlers, the true believers, the ones who see the forest for the trees. For us, the short-term noise is just that, noise. We're not here to scalp a few percentage points. We're here for the life-changing gains. And from a long-term perspective, the current setup is looking incredibly juicy. We have a Federal Reserve that is finally starting to pivot, which is a massive tailwind for an asset class like crypto. We have the imminent arrival of spot ETFs, which will open the floodgates for a tsunami of institutional capital. And most importantly, we have the relentless march of innovation in the crypto space. This is not just a new asset class, it's a new financial system being built from the ground up. So, for the long-term hodlers, the strategy remains unchanged: stack sets and chill. Dollar cost averaging is your best friend. By consistently buying regardless of the price, you are building a position in the most disruptive technology of our lifetime. Remember, the goal is not to time the market, but to accumulate a position that will secure your financial future. It's a marathon, not a sprint, and the patient will be rewarded. Of course, we can't talk about the crypto market without paying our respects to the queen, Ethereum. ETH has been on an absolute tear, slicing through resistance levels like a hot knife through butter. It has comfortably reclaimed the $4,150 level and is now knocking on the door of the next major resistance at $4,220. A convincing break above this level, followed by a break of the $4,260 and $4,320 resistance zones, would signal a continuation of the uptrend and could pave the way for a move towards the $4,600 to $4,800 range. For our swing traders, a breakout and successful retest of the $4,260 level would be a textbook long entry. As for our long-term hodlers, the story is much the same as with Bitcoin. Ethereum is the backbone of the decentralized finance revolution, and its long-term potential is undeniable. Continue to dollar cost average, and you will be handsomely rewarded. But to get a true sense of the market's health, we need to look beyond the price of individual coins and examine the broader market indicators. First up, let's talk about the total cryptocurrency market capitalization. This is the total value of all cryptocurrencies combined, and it has just surpassed a staggering $3.93 trillion. This is a massive number, and it tells us that a tremendous amount of capital is flowing into the crypto space. A break above the $4 trillion level would be a major psychological victory for the bulls and could trigger a new wave of buying. Next, we have open interest, which is the total number of outstanding derivative contracts, such as futures and options. Open interest in Bitcoin has rebounded to $31 billion, which is a clear sign that traders are re-entering the market and placing their bets on the future direction of the price. This is a healthy sign, as it indicates that there is plenty of liquidity in the market to support a sustained rally. Finally, let's talk about liquidations. We've seen some brutal liquidations in recent weeks, with billions of dollars in leverage positions being wiped out. While this is undoubtedly painful for those who get caught on the wrong side of the trade, it's actually a necessary evil. These liquidations act as a cleansing mechanism, flushing out the excess leverage and speculation from the market. This creates a more stable and sustainable foundation for the next leg up. Now, no market is an island, and crypto is no exception. We have to be aware of the external forces that can send shockwaves through our little corner of the financial universe. First up on our watch list is the political soap opera playing out in Washington, the looming threat of a US government shutdown. Now, you might be thinking, Boni, what does a bunch of politicians squabbling in Washington have to do with the price of my precious Bitcoin? Well, quite a lot actually. The Fed has been very clear that its future interest rate decisions will be data dependent. A government shutdown would mean that the release of crucial economic data, like the jobs report, could be delayed. This would effectively blindfold the Fed, leaving them without the information they need to make informed decisions. This uncertainty is like kryptonite for the markets, and it could lead to a period of intense volatility. It's a classic case of the lunatics running the asylum, and we're all just along for the ride. And then we have the main event, the moment we've all been waiting for. The ETF deadlines. October is shaping up to be a make-or-break month for a number of spot cryptocurrency ETFs. We have decisions coming up for Solana, XRP, Litecoin, and Dogecoin. The big one to watch is the Solana ETF deadline on October 10th. An approval for a spot ETF would be a monumental event. It would be a green light for a torrent of institutional capital to flow into these assets. We're talking about pension funds, endowments, and family offices, all of which have been chomping at the bit to get a piece of the crypto pie. An approval could send the price of these coins into the stratosphere, but a rejection could be a major setback, triggering a wave of selling. The stakes could not be higher. So, after all that, what's the final verdict? What's the master plan for navigating this chaotic and exhilarating market? Let's break it down one last time. For our intrepid short-term traders, the name of the game is precision and discipline. Keep your eyes glued to those support and resistance levels. Trade the ranges, take profits off the table, and use stop losses like your life depends on it. The market is a minefield right now, and you need to be a nimble and agile soldier to survive. For our savvy midterm swing traders, the strategy is one of cautious optimism. The October narrative is a powerful one, but don't get blinded by the hype. Look for confirmation before you enter a trade. A breakout and retest of a key resistance level is your best friend. And always, always have a stop loss in place to protect your capital. And finally, for our wise and patient long-term hodlers, the message is simple: stay the course. The fundamental case for crypto has never been stronger. The institutional herd is coming, and you are already positioned to reap the rewards. Continue to dollar cost average and don't let the short-term volatility shake you out of your position. The future is bright, and you are on the right side of history. And that, my friends, is a wrap. We've covered a lot of ground today, from the inner workings of the Federal Reserve to the Wild West of the crypto markets. I hope this deep dive has given you a clearer picture of the opportunities and the risks that lie ahead. Remember, knowledge is power, and in the world of crypto, it's the difference between being a winner and being someone else's exit liquidity. So, do your own research, develop your own thesis, and never invest more than you can afford to lose. If you enjoyed this episode and want to see more content like this, you know what to do. Smash that like button, subscribe to the channel, and hit that notification bell so you never miss an update. And please jump into the comment section below and let me know your thoughts. Are you bullish on October? Are you worried about the government shutdown? What are your top crypto picks for the rest of the year? I read every single comment, and I genuinely love hearing from this amazing community. Until next time, stay safe, trade smart, and may the crypto gods be with you.